There's a Bing. Okay, so tell us a little bit about how you set up the trades in the replay, Chris.
So basically, I'm going into it being very conservative. So what I basically do is I've been using the short list, and I've been ranking it by volume percent.
Mm-hmm.
And I will look at the first thing I look at is I look at whether it's a green or a red day.
Mm-hmm.
The basket, if the basket's green or red, I then will pick. I'll go through the stocks, whatever's displaying in the short list. I'll go through and I'll look for something that's looking like it's going to break through the profit zone.
Mm-hmm.
I then look at the basket and I look to see if there was a solid trend line in an upward or downward direction, and if there's a strong kind of direction there, and those three, and I'm getting, let's say I'm looking on the call side, I get a green up on the top as far as like the basket's green and the stock is green, and then on the left side next to the name of the stock, if you see like a little, a green, up there, a little green chart that says, I'm going up, or exactly.
Indicators, So
if those three things are all kind of looking good, and it's breaking the profit zone, then generally I'll purchase.
Awesome. Here's one with the marker. That one means that there's slope, and it actually tells you if you hover over it, strong slope up or down.
Yeah, and one thing I've really noticed is that if there is a bit of in that basket, if you get that direction happening in the basket on the, I guess that bottom chart, when you're looking, that's what you call the basket.
Yeah.
So the only times I've been hesitant is when there's no real direction. It's just kind of, and then I'll just kind of focus in and be like, okay. Usually I would then wait if it goes out of the profit zone and that blue, I've been following a blue indicator that goes up with it. If that breaks the profit zone, then generally what I've noticed is it will kind of run. It'll go, and then I'll get in on it.
So when you say the blue indicator, in this one here, or the J-stop thing?
No, not that one. Which one is it? It's I think it's just, you see how you've got a red trend line down the bottom?
Yes. Yeah, I turned that on because you mentioned trend lines,
Yeah, and then there was another line that was kind of will follow the stock as it goes up.
Probably the mag line?
Could be.
MA Genius?
It could be. Let me, I'm just going to flip over to my...
Yeah, that'd be good. Yeah, I turned trend lines on just because you mentioned it.
Okay, I'll just pick a day here. You know what was interesting? Actually, I'll go back to last Monday, because this morning, I decided to just play with last Monday. And let me just move this forward a bit.
Here on the 60-minute, you've got the blue mag line just because there's enough time to show it. But here, there's not one yet, because it's only the 3rd minute of the day. There you go.
Oh, okay. Yes, that's it. That's called the mag line?
Yeah, moving average genius.
Oh, okay. Yeah. So
yeah, you don't. Yeah, it takes a few candles before you get it.
So what's the difference between the mag line and that red trend line?
Oh, this one here, that's just marking the bottom of the risk zone or profit zone. That's all it is that one there is just dividing it out. Some people need like the heavy lines and the tinted area. Some people don't need both, but we put on both just so it's more obvious.
Okay.
And this stock is inside the risk zone until later. You know, that wasn't like a great mover. I just went to that, but you know, here's Tesla, and yeah, this is today. But yes, just so you can see the mag line.
Right. Okay. Yeah. So generally, if the mag line, once the mag line breaks the profit zone, then I look to get into it.
Yeah.
And then if it starts going, if I miss it, like it's a bit high out of it,
yeah,
then I usually don't.
Good idea. I love it, because as you've probably seen with lots of them, if I just move forward here a little bit, when it's too high up, quite often it comes down, comes back in. I'm going to turn off the K-band just so you can see it. It comes back in, and you pay a big price before it goes up again.
Yeah.
So if it's reasonably tight, it's okay. Not super tight, but the ones that are expensive, I can't think of one right now, but see, like this is a little bit far away from the risk zone, in the sense that you could make money, but it could just as easily go flat because it's overbought or oversold in this case. I'm not saying this one in particular, but yeah, when it's too far away, it's like, I don't really know what you're doing.
Yeah. So yeah.
So you were saying this is what you do, and it looks great, and cool.
Trying to keep it simple.
Yeah, no, that's the way to go, because yeah, awesome.
So one of my actually questions, and this is just jumping ahead a little bit, to if I was going to go live, was one thing I understand a little bit about buying options is that if you were to buy options in the traditional sense, you can buy out of the money, in the money, at the money.
Yep.
In the replay, when I press, let's say, for a call, I buy a call, and it shows up on the chart as like, okay, I bought it at this point.
Yeah.
If I was doing that live, okay, would I have to go in and decide if I want to buy in the money, out of the money, out of the money, or am I buying at the market kind of?
Yeah, well, you want to buy in the money, and actually I'm just loading up the live version, and I made a video that maybe what I'll do, because I haven't finished the second course yet, but this one is really good because it shows in the money, out of the money, and that kind of like the reality that yes, you can make money with options, because I show some live data in that video. But generally, buying slightly in the money or slightly out of the money is what you want. And so the live program actually has that arranged for you as a convenience. So I'm just going to go bring up, okay, here we go. That's not it. I need this guy. Okay. Okay, so it's gonna take a few minutes to fill this, but this is what I affectionately call the quad. It's just a simple name. What it'll do, and it'll take a few minutes to load the live data. That's just normal for startup. Let me draw on it until it's ready. It'll divide this thing into two halves and a left and a right. So you'll have your calls over here and you have your puts over here. And it'll say all kinds of nice stuff about what the strike prices are and all that stuff. But one will be, in this case, this will be in the money, and this will be slightly out of the money. This is out of the money because it's above the strike price, if the strike price is that, where this is in the money, using that sort of thinking. And it's got some tinting and all that, and you'll see all that. But it automatically tracks all that stuff for you, and you can track individual options and You know, there's a lot of cool stuff it does. Yeah. So the idea though is you're still the guy that has to pick the option.
Okay.
And what this stuff does for you is it's actually going out there and getting the option volumes for today, the open interest, the high, the low, the last price, the bid size, the ask size, not just the dollars on a bid and ask, but the bid and ask size. I'm going to turn this off. Sorry, usually I turn the phone off, but anyways, so that, like I say, it takes about 3 or 4 minutes to load all that up. So you usually start a live program about 5 minutes before the market starts, and it's got all that stuff filled in.
Okay. So one question I had was, in order to get in, if you're going to buy more than one or two if you're going to buy more than 2 contracts, or let's say at least 2 contracts, are you looking at volume? Obviously, you want to get in and out quick, and you need volume, obviously, to get in and out quick.
Yes.
So you're buying, obviously, I would assume, options that have quite a bit of volume.
Yeah, that's right. And the program pre-selects, even before you start anything, stocks that have high liquidity on the options. It's nice that the stock has liquidity, but we don't care. We want liquidity on the option.
Right.
And so so for example, this is from the sometimes after hours the live data is quite slow to fill in. But here, all these ones that are marked blue have at least 1,000 contracts traded per day for the last bunch of days.
Oh, okay.
These ones here in black are at least 100 option contracts for that option contract per day for the last bunch of days. So here you've got the SPY 150, which is expiring in 4 days. A 210.5 strike price. This is the call. This is the put. So here you've got just tons of option codes. This is one of the most super liquid things you can get. If we go look at, say, Apple, oh, look, it's already got the data for Apple. So this is the actual data for today, and you can see here it's starting to fill this in. You get both of these grids if you want. You don't have to have both, but it's actually doing all this for you. It's saying, well, this option here, the Apple, the 133 strike, is it's also over here. This is what the quad, as I call it, does. Let me get rid of that.
Oh, okay.
Is it automatically, and you get choice, and this is what the choices are, and this is based on just sensible behavior, is if it's Friday, I may want to look at next Friday because IB, for example, unless your account size is large, they don't want you buying or selling on the day just before expiry.
Yeah.
So, and it's actually not such a great idea. There's a certain strategy, but it's kind of hairy and whatever. So you can say on Friday, I want you to roll over and get me the next expiry. Now it's not Friday, so what it's showing here on this here is it's showing the 4-day expiry of the calls and puts. So it's basically grabbing these 4 out of all these different things. It's grabbing them. Now if you want, you can, and I'm going to just tell you all the neat stuff you can do, but you don't have to do, is I clicked on, I'm going to close it, I clicked on that guy, for example. So this is today's data on that option code, and if I go click on some other stock, these things will all follow the current stock, but that thing's going to stay stuck there.
Right.
So you have a lot of, not that you have to, but you've got a lot of tools available with the live program that I do not clutter up people because it's steps. It's like, today you're going to learn how to ride the bicycle. I'm not going to put you on the highway. It's like.
Okay, Alan. So in this one with the Apple put 135.0, just go through what each of the the last, the ask, the bid, all that sort of stuff.
Sure. So in this one window all by itself that you can put wherever you want is the same information as the quad. So
Okay.
it's the same format, and that's on purpose. And by the way, you know, if you resize it because you don't want all that crap at the bottom, that's all you want. You know, it'll do that for you. And the quad does the same thing. As if you say, well, I don't want all the high-low, I just want, and I don't need the ask size. It just shrinks all that up for you. So you don't have to clutter yourself up with all this stuff. So what's happening is, and we'll just go through them now, is this is the option contract reference number. You don't need to have that, but I have to put it there in case somebody wants it. So that means 2015, I forget what the 01 is, but anyways, it's E means which month it expires, but you see you already have all that right here. You don't need all that other crap. And the 133, that's the strike price. So the strike price is always here because here you've got two different strikes. You've got the 132 and the 133. So because the price is 132.69, that makes one of these in the money and one of them not. And because this is a call, this one's in the money, and so you get the green tint. And because it's a put, you're in the money 31 cents.
Right.
You're in the money 69 cents.
Okay.
And so the yellow is telling you, yeah, you're not in the money. Not that that's a problem, but just so you know, because it's backwards. You know, it's not like, you know, this call, and if I put it you know, in the money, put them beside each other, and out of the money, it'll confuse somebody else. There's no way to win. So I just did it that way, but that's what the tint in the background and what this, you know, in the money's green to say, hey, you're in the money, and the blue just means you're a little bit cold. You're not in the money yet. Yeah. So the next items, these are the easy ones because they're the same everywhere. The rest of it's all the same.
Okay, so Alan, before you get into that, I just want to go back to that 151E133 number. Yep. Is that not the number you would need to know if you went to IB to make the trade?
Yeah, and the strange thing is that different data providers, brokers, all that stuff, although they're supposed to use all the same reference IDs, they don't. And so, but that with the stock code is the actual contract you're buying.
Okay.
And so IB, I believe, uses these codes. I can't remember right now. I'm in the middle of making a data connector for IB. But whatever your data source is, whether you use our current one or you use the IB one, it doesn't matter. That contract code is good enough of a reference that everybody on the planet can convert it or use it.
Right. So this is the feed from. Is this a feed from IB or is this your own feed?
It's not ours. We actually pay money every month for it. It's like $70 a month kind of a thing.
For this.
And, that's why we want people to go with IB because their data is quite good. And you know, there's no cost to us or you guys. So.
Okay.
All right, so that you got the last, the ask, the bid.
Yep, and so the size of those offers or sales are here, which is kind of handy because this is not going to tell you everything, and you don't know about some guy on some other brokerage account that's got, you know, at 334, although you're not supposed to do that in some cases, you know, where he's got 20 sitting here. This is hot in the sense that it's updated every few seconds, like all of them, about what's being asked and the bid size. So this is what actually got traded was at $3.40. You know, two of those. But this is the amazing part. This is today's volume, 34,000 on this contract.
Oh wow.
Yeah.
So the open.
So you know it's liquid.
Yeah.
Yeah. Very liquid. So Apple and SPY are the most liquid ones out there. So open interest, there's 12,000 contracts. What do you mean there's 12,000 and you traded 34? Yep.
So what does open interest mean?
That's the number of contracts that were created. So what we always tell people as day traders, and that's all we teach, because the swing is just too erratic.
Right. Let's stay on day trading.
Yeah, day trading is. I'm not going to teach swing trading. That's how much I've had enough of it. That when you buying a contract, somebody out there in the universe, it can be brokers, individuals, corporates, like Goldman Sachs, it's what they call they write or create these option contracts. So when somebody creates one, that's the total number that exists today out there in the world.
So in other words, 12,494 contracts have been created, and it looks like they've all changed hands 3 times.
Yes. Now, there could be people sitting on...
The volume is the 12,000 contracts being bought and sold,
Yeah. Yes. And we don't know who's sitting on them versus who's rotating them 50 times. We don't care. All we care is like, can I get in? Yeah. Can I get out? Oh, yeah. And this is where spread's really nice. There's a 5-cent spread. Apple and SPY are awesome that way, because you'll see the spreads in all of them are low. Well, here you got a 20-cent spread. Well, that's between the bid and the ask. Well, it's also the end of the day. Right. And this one was a bit out of the money and whatever, but here's a 20-cent spread. That's not a bad spread. That's a good spread. Right. And you're going to see, because we're going to go look at some other ones. So the high 370, the low, and the open was 310. So basically, it didn't move a ton. And they're all kind of the same on this. Apple didn't move like crazy amounts, but I believe Apple has earnings coming out today or tonight or tomorrow, and so this is kind of a higher price than normal because people are expecting that it could jump. So this is where the swing traders will do what's called a strangle, and I can tell you that that's generally a bad idea, but lots of people do it, and that's okay.
Okay, so a question that we had from somebody else, and Chris, you may think of this question or wonder about it at some time, so I wanted to kind of bring it up, because we're talking about open interest and volume, is, what would happen if, let's say that this open interest is because there was 2,000 people trading, okay?
Sure. What
happens if all of a sudden tomorrow there's 20,000 people trading?
Well, the people at the stock market would love it. And actually, what they do is they'll go out there, and because I know people that they've done this with, is they'll go to brokerage houses and say, I need you to write more contracts. And they actually pay them a small premium to write those contracts. And Goldman Sachs and all those guys, they'd love it if there's more people. They will happily go out there and sell a whole bunch more.
Okay. So in other words, if all of a sudden we had, 30,000 people using the Waves of Profit software, and you were all looking at the small number of stocks, right? Whether it's 5 or 6 on the or it wouldn't matter, because basically the whole market is going to grow. Even though we may be always wanting to buy it, there's always going to be somebody on the other side who's going to want to sell it.
Yeah. Well, and here's the comparison. United States has 1 million option codes. I don't know the exact number, but I can look it up because I scan all of them on weekends. 300,000 different option codes every day. And you go, are you nuts? And it's like, no, I got a computer. Figuring out this stuff. Now, compare that to Canada. I think we have like 60,000 codes.
Oh, wow.
Right? So what is it about the United States? It's not the population. There's a whole bunch of people trading here. Yeah. So if they show up, we will make more. And so if people stop trading, because you'll notice things too that are really kind of cool. Who was it? I'm thinking about Ralph Lauren a year ago, and there was a few other stocks. All of a sudden, they have all this liquidity, right? The open interest is here, and all this stuff's going on, and the stock's going crazy, and like Taser. Let me just go bring one up.
Well, real quick on that on the Apple, when you look at the open interest on the put side, it's only 662.
Right.
So would that be considered quite low?
For Apple, yeah, that's kind of low, and it really doesn't much matter. You know, I'm going to go to another stock here for a moment, and
So the open interest is not as important as the volume.
the volume's all I care about. And you see, that's what a lot of other people do, is they start talking about the open interest and thinking it's great. Well, I know lots of stocks that have big open interest and nobody's trading them because it was a broker-to-broker deal. And I've seen all this stuff with data. So here's one that's not, well, it's taking too long to fill here. Let's see if we can find another one that's actually got some data. After hours, especially this time of day, it's pretty bad. So here we go. Here's Celgene. So it'll fill that up in a few seconds. Now you'll notice that there's a skull and crossbones thing going on. That's just as a convenience for you because it's all about making it easier for us.
Well, stop for a second, Alan.
Yep.
Chris, if you were to be handed a container of liquid and you noticed the skull and crossbones on it, would you drink it?
Definitely not.
Exactly.
Yeah.
So you do not trade this.
That's a good signal.
And it may come back and be better later, but you know, I'm the why does it do that guy. And if you hover over it, it says open interest is low and volume's low, and basically if you hover over that, it'll tell you why. But you know, this is all I care about. What's this volume here? Celgene 500. Can I, if I'm buying 5 or 10, can I get in and out? Yeah, no problem. Because you can see the bid-ask size. It's good. But here on the put side, look at that bid size, 161. You only have 500 of them.
Right.
How is that possible?
Right.
Somebody's wanting to do something there. So, and that's not, you know, a game. That's real data.
Yeah.
And now, because we're always playing with the nearest Friday expiry, you're going to see some unusual open interest because these contracts are created on the Thursday night. So the Friday a week ahead of when they expire, there's not a lot happening. But that's actually what the server does for us, is it says, well, you know, this thing's not so good. And so it'll actually take some things off the list that some people like. So for example, people are saying, well, did you look at CMG today, Chipotle Mexican Grill? And I said no, because the computer automatically took it off my list. Well, why? And this is before the live data is loaded, is I've got gray here, which is low volume. I've got maybe 100 plus option contracts here and here that have been traded with a reasonable spread and reasonable liquidity. The rest of it's crap. And so, no, I don't know what's going on with CMG, and I don't care.
Yeah.
So I keep my trading kind of simple that way. If it's not on the list, I don't look at it. But there's other people, you know, that they love Starbucks and they'll go trade it, and so they have it stuck on their list. And the way you stick it on your list is in the live program. Is you go here to the empty row, and you go SBUX, and then a few seconds later, it'll load the stock code. It's going to have all that, and I can go to the chart. Here's the chart, and it's got all the neat stuff for it.
So when your buddy comes over and you have a couple beer and he says, man, I got a hot stock tip, we should buy whatever, you can pop it in and take a look at it and say, well, Alan says no.
Yeah, I mean, right now I like that short list.
Yeah, that's right.
That's exactly it. So here,
I'm going to let the computer do the work.
You see, for whatever reason, this is the data feed, right? And IB might be better after hours. I don't know yet, but we'll find out. It's telling me that, yeah, there's some decent liquidity. See, it's drilling into all that stuff to figure it out. So there's one really good, highly liquid option code right there. And if I go bring that baby up, it says it had 3,000, open interest 1,400, I don't care, but 3,000 got traded today. But 17 cents, 18 cents, the high was 53 cents. Well, I'm paying the broker probably 2 cents, plus the bid-ask spread, that's another 4 cents. So, you know, if I'm doing really well and I buy this at the bottom, let's say, and I pay my 4 cents, so I'm getting in at 20 cents and getting out at 50 cents, I'm pretty happy. But I know pretty darn clearly that, well, that was the last. So let's say I sold it at 50 cents up here because that's where the stock went, and you know, I bought it back for cheap at 20 cents. You know, I don't know how this thing's going to turn out all day. It's like, that's really, you can't hardly make any money there after you paid the broker, even if it's got decent volume. That's for swing traders. That's not for day traders.
Can you
have to be in for the long haul.
Based on what the chart you've got here, can you go through, like at the start of the day, would you be able to go through a little scenario of, let's say, whatever, like a 2-minute or a 10-minute trade?
Well, this one's really easy because it fits the rules. You've got signal color, you're outside the risk zone, you got mag line, you got everything going for you. The only thing you don't have is volume. You had a little volume spike here, but the rest of it's dead, which means it's riskier. So I wouldn't trade that one, even if, and in this case here, and this one won't be in the replay. See, the replay says, you know what, this is junk, and you know, sure, you can show people 5,000 stocks, but they're not likely to trade that one, so this isn't real, so don't include it. So the replay has essentially all the normal things that you can trade. The only thing it'll include that isn't perhaps kosher is if I go look at, for example,
before you do that, if you could just go back to that option. I just wanted to look at those 4.
Sure.
See, there it is. There's 3 skull and crossbones and 1 non, right? So it's like, so now it's really easy if you're gonna be, if you're insisting, you know, you got to look at the top left-hand corner.
Yeah.
It's great.
So the one thing I'm trying to understand here is, when are you looking at this? Are you looking at, you're looking at the chart? Let's say you're looking at Starbucks and
I'll give you the scenario. Is you've already figured out that you like this thing enough to buy it.
Okay. But
either you've got some kind of a signal or something says to you, I like this.
Right.
Then I'm going to come here, and this is what's different between the replay. It's like the extra last steps. You know, like using the riding the bike example. It's like, yeah, I can ride the bike across the intersection right now. However, I don't think that truck is actually coming to a stop. You know, whatever the example is, I don't want to actually go there. Although it fit my rules, I can't make any money on this baby.
Right.
And I'll tell you what I do. There's a little hotkey. It works in the replay. It works in the live program. You hold down the shift key and you hit the delete key. It will take that stock off the list. It is gone.
Okay.
During live trading, I am frustrated by some stocks because it's like, you should be a good stock. I love you. You know, your signals are great and you're trading in a great range. This one is a low trading range. This one is $1.18. It's like, really? I'm supposed to make money in there somehow. Why don't I go with this $5 stock instead of this guy? But if I don't like it, I hold down the shift. Here we go. I hit the delete key. It's gone. Because I don't want to see it. Now, maybe tomorrow, you know, not that stock, but some other stock is going to be moving well. Like Netflix, sometimes the option prices are great and things are good and everything's fine, but then for some day, because it's before earnings, the price is just, you know, crazy high. I don't want to buy it. I don't even want to know about it. I'll just delete it off my list because it's a distraction.
Right. Does your volume percent and your volume genius lines, do they correspond with the volume in the live data there?
Yeah, well, this is exactly, the replay is exactly like that in almost every respect except for this thing. So if we go look at this stock and we'll make it, well, let's go pick Tesla, because you can see Tesla on the replay versus live. Now, sometimes after hours, the data feed guys, they play around with things. But if you want to open up your replay today for Tesla, this is the live program. This is the live data. Those volume histograms should be the same, and I'm just going to go, I had it open earlier, I'm going to go load it up right now.
That was for today?
That's for today in the live program. So here, I'm going to Tesla, and I'm going to the end of the day, and I'm gonna hide this and that.
Looks pretty much
so
the same.
this is replay up here, and this is live down there.
Oh, wow.
So except for a couple little differences, which I don't care about, because these actually come from two different data sources. This one here is the expensive data source, you know, which is like the $200 a month kind, versus this is the $70 a month kind. You'll see there's not really much difference.
Yeah.
Nothing that I care about.
Yeah.
And that's the point of the replay, is if I go look at my signals, they're pretty much the same. Oh, I've turned K-band off here. So if I put K-band on, you can see that it came on here, you've got the 4, you got the 4, your arrows, you know, the Y point markers, you know, the price up here, the price there. It's like you're looking at the same stuff.
Yeah.
And that's the purpose. I mean, I did not want to write the replay, I'll tell you that. This was, I think, 7 years ago, but it's like, I have to. I really have to. Because when the day was gone, it's like, well, what? Oh, I don't know anything.
Yeah.
Yeah, this will really speed up your training, because you can just practice and practice and practice, and then it's second nature, right?
So quick question on some of the indicators. Do you tend to use that, like, I don't even know what that K-band is. I mean, obviously I want to try and keep it fairly simple, but is there some other indicators that are kind of like no-brainers, as far as if that's, you know, if the indicator is showing a certain direction, then
that's a great question, Chris, and I was just going to suggest maybe, Alan, just go through what the indicators are on here, because I think these are the ones that we mostly use, right?
These are basically it, and they are stripped down to the lowest. Like, I have to have these, and I'm not taking any of these off, because I've, you know, tried different, you know, what's on, what's offs. So in this case here, I'm just gonna, you know about the tint and the risk zone, so I'm just gonna take that off, so you don't have to wonder about that one. So that's gone. And the signal color, which is something you have to use with something else, because even though it says it's red here, you're way in the wrong area to be going red. It's way too green to be making reliable money. So there's the signal color, which you use. This here you haven't used, and that's the K-band. The K-band, I'm just going to put this on, is a faster marker, and so it does this tinting around the candle to say, right now, this thing's good. But just like the signal color by itself, it's not enough. It's like, well, am I above the mag line? Well, yes, I am. Is the market green or not? Well, yeah, if it's a weak market, I can go on a strong green stock. This is clearly a strong green stock. Like, you know, anyway, so we'll take that off. So there's the mag line, which is the most essential of all of them, because it's got the highest accuracy rate, in the sense of, I never fight the mag line. I never. And it's just a mistake. If it's right 90% of the time, who am I?
Yeah.
I'm following it.
And then we've got the volume.
So here you got the histogram of the volume, and I've had lots of people testing, well, can I get into a trade and it doesn't have much volume? Yes, you can, but if you want easily repeatable, higher probability of success, you got to have volume. A big crazy volume like that is awesome.
Now this isn't just normal volume, this is excess volume, right?
Excess volume. So that's what the histogram is telling us, is for this moment, for this stock, based on 20 days. Yeah.
Right, okay, so we basically have a baseline of what we think the normal volume for a stock is. When it deviates from that, in other words, it's way more, then this is what it's telling us, okay? So it's like, so it could be normally 10,000 shares or whatever, and all of a sudden it's 25,000 shares. Then you get the pink. If it's 10,000 shares, you don't get the pink.
Right. Sorry, that volume, are those, is that volume based on the stock price, or is that based on the option volume, the option trading?
That's the stocks volume.
That's the stocks volume. Okay.
So here, this is the daily chart for Tesla. I put an orange line at the bottom just so you know what average volume is. So here's average volume. So today was a big day. Here was another big day, and a few others kind of big days.
Right.
But to make it, you see, this is the whole thing about, we got computers. Why don't we use them? Put that thing to work. This is determining by the minute what kind of volume should I be having for this stock. Well,
Right.
so this tells me a lot right here. It's like, well, the stock was active here.
Look at the volume.
Down here, it was dead. What did I get here? I got dead.
Yeah.
And that's really such a simple, beautiful thing because it's so easy to follow. It's like, oh, okay, so volume is always an indicator, but it works about 50% of the time that if I have big volume, I usually have a big move. Okay, great.
So it can be the start of a move and it can be the end of a move.
Mm-hmm. And that works with stocks as well, where you see the beginning was here and it had a big bang, and it had some more bangs, and then you see the volume fell off and the stock went sideways.
And the volume fell off, right.
And so here, this super spike, relative to the others, was pretty close to the end of the move. And yeah, you had some more, but you see here was a new direction right there. That I'm not drawing it very nicely, but anyways, that candle there was a new direction, and that was a, peaked up volume. What was that direction? Well, this was the beginning of the move, not looking at the bottom, but this was essentially the end of the move. It just coasted off. Well, here was the highest volume for the last 10 bars.
Yeah.
And it doesn't always work that way, but it works enough of that way to go, okay, I'll just follow that.
So another way that we can tell volume is candles.
Yes. And it's harder to see that just because this is such crazy volume here. But, that width is about the same as this width, but, which is the kind of the maximum. But you can see how skinny this little guy is.
Yeah.
That one's kind of skinny relative to these guys, which are, fatties. So you see all these little tiny bodies, tiny range, and tiny volume. It's like there's nothing going on here. I'm kind of dead.
So if you couldn't see the volume and you saw the big green candles on the left, and then you look over and you see the teeny weeny, and really talking width more than height, candles on the right hand side, and you didn't know which part of the day would you want to be in.
Oh yeah, definitely.
Yeah, so that's part of why we do that, and also why we have the candlesticks, so you can see the range of. It may open at a certain price and close at a certain price, but it could be way above and way below, and so that's why we have the lines. So just make sure you don't confuse a line with a candle, because sometimes it almost looks like all there is on a couple of them is a line.
Yeah.
What about you've got your candle and then the wick? Like the wick is, let's say, a long wick, but a very short candle.
Yeah, and there's people that teach candlesticks, and I've went through all that material and embarrassed a few of these candlestick guys. It's just, I didn't mean to, but it was the part of, well, you say this is true, prove it to me. And that's where they got, the point of it, there's two really useful things out of that whole candlestick school, and that is, one of them is called a doji. That's a Japanese word. So like here, this candle here is a tiny body relative to the range.
Right.
I don't care about how big it is, compared to the candles. I just care that the open and close is pretty close, whether it's red or green. And they got different names because if there's if it's up here and down there, it's a shooting star or a hangman or a hammer, and whatever the names are, I don't care. And then, like this one here is, whatever star, I forget all the names. I don't care. What I do care about is, and this gets into stuff that is nice to have, but if you have too many weird things that are sort of working, it just clutters up a good system. So I don't look at any of that stuff except for the doji, And I did have pros talking to me, hey, well, which one of these are bullish candles? And they got confused. Well, that doesn't help me. That's just crap then. So what this tells me is it's indecision. That's all it tells me. It's at a, or you could say it's a stall. It might turn. Well, it might turn up. It might turn down. Well, that doesn't help me. But what I do appreciate out of this is that it's a stall and it's undecided. Beyond that, I don't do anything with candlesticks. What I do care about, and this comes from W.D. Gann and everybody else from 100 years ago. Well, I have a higher high here than I do here. Yeah, it went even higher. How did this one do? Well, it went higher, and there's your wick. And then this one went higher. Oh, and look, this one didn't go higher. Oh, is that the end of the move? No, could be though. But one of my clues, and I haven't really talked about it enough, is if I get 2 red candles in a row, that's usually the end of the move. Not always, but that's where it's like, well, I can't tell people, not always and maybes and some things. I have to give, and that's what the mag line is better for. Is it's like, well, if it crosses the mag line or the mag line gets dashed, that's a good exit if you're trying to get the most out of it. If you're doing, the safe trading, the bread and butter trades, you're getting 10%, you're going to get that a lot. You can make a lot of those. But these long runs, I wouldn't even teach people that because most people aren't ready for it. But I will tell people that are getting there because they look at these and go, oh my God, I could have made 100% on that or 200%. Yeah. It's like, yes, will you please just prove that you can make 10% every day? Yeah. Then, because what they do is they start screwing up and they start losing money every day or most days. And it's like, oh, damn, that's not what you're here for. You're here to make money every day or almost every day. So the 10%.
Okay, so let's look at another, some of the other indicators. I see you've got the.
Yeah, I'm taking them off as we go here.
Yeah,
so that
you got the RC and the RD and the RE. Yeah. So those are really cool.
Those are the target prices, and these come from antiquity almost. A lot of heavy money.
They're drawn. Sorry, Alan. They're drawn before the day starts. These are not something that at 1 o'clock it decides that the RE line is here. These lines are set up. And they're set up long before the day started, I guess. And that's what Alan's trying to say, and I'm interrupting him in saying it. But.
Yeah. So the thing is, and that's a good point. Here's Fibonacci lines, and this one's a pretty nice fibs. People use fibs, but you know what? It's a relative price based on the high and the low, and it's just more useless crap. I include it in there because some people say, can you please? And it's like, yeah, I'll put it in there, but it's junk. Where it's like you have to, well, if you face north some of the time it works. It's the first minute that we know what these prices are, and they are support and resistance prices. I'm going to go look at a couple other stocks and just show you how well they work as predetermined target prices. And so here, it came back to this pivot line. And it opened here and then ran away, and then it came to this RB and had trouble. And let's find some other ones. This one's not as clear, but look at this one. Where did it stop today? Right there, and it had trouble on both sides of the line. Does it work every time? No, but it works so often that I give it a lot of attention. And yes, sometimes it'll break through one of these lines like it did here. That's fantastic. But this was a really good mover today.
I mean, it looks like it broke through 3 sets of lines.
This is unusual. This was a big day for this stock. Which is rare. This is one of the indexes. So 260% move. I generally tell people if you move through 2 of these guys and you're still in a trade, get out and get paid.
Well, yeah, like that. I would assume that that's a lot longer than 10 minutes.
Oh yeah. Well, here's the 11 o'clock, 12 o'clock, 1 o'clock, and you can see where it went dead, right? It's like, well, there's nothing there, and the candles get skinny and whatever else. But if we go look at something else that's not quite as dramatic, but more normal. Well,
so the point of it is that if you know these lines are there, and you know that this is probably going to be an area where your stock is going to struggle.
Oh, okay.
You're ready for it, right? It's like, okay, we're getting close. well, do I want to go and see how far this is going to go, or do I want to get out because I know that if it's going down and then it starts going back up, my option price is going to dramatically change too, right?
Because, yeah, it's like, am I going to get paid if I hang on for this when I knew about this line here? Probably not.
How does how would that profit risk zone chart
yeah, put that up. That's a great one.
Result, how does that correspond with those RD? Oh yeah.
Very nicely, as a matter of fact.
Yeah.
And it's like, sure, you broke out of here, and then it bounced back in and did a bunch of junk, and it didn't break, and we'll get into that. But when you put them all together, see here, if the DD or something or the market was red, and I liked it, and it's 2 o'clock, so that's a good time to trade. You have big volume happening. This would have been a good trade, but it fits all the rules, and so we're going to take off the risk zone and get back to because I got to do something shortly. I said I'd pick up my honey. So here, what we've got left is we've got the target prices. You'll see works quite often. So if you're thinking of getting into a trade, and by the way, this is all in the new course, all this stuff, and you're here, and you've got this guy right there, it's like, I don't think I'm going to get in here unless it's around here, and I think that's the beginning of a move down. Here, this is the end of the move. Well, that's your exit price somewhere before that. Get paid and get out.
Yeah.
I don't care about how far it's going to go. I want to just get paid. This is not about anything else. So the other things that we're going to turn this guy off. So that's target prices. You're going to see these breakout lines. Now, before 9:45, the market gets a bit jumpy, and you can see like here, you had up move and down move and up move, and it gets a little bit hard to trade. After 9:45, it's a little easier to trade. Now, I'm not saying this stock was the one to trade, but these lines are very helpful to say, it'd be better for me if you broke that line on a nice candle, then I would have a profit opportunity. But if
I have a quick question actually about that, because one thing I noticed is I've watched some of your YouTube videos.
Yeah.
And a lot of the replays that you show in that are, one thing I've noticed is a lot of them are within the first 10 minutes of the morning.
Yeah.
And I also noticed myself that I've tried some trades where I'm, it says warning, not enough candles.
Yep.
I've tried some trades in that area, and if all the indicators that I'm working with are looking good, and I trade before there's 6 candles, it still seems to work out. But there's sometimes where if I go longer and I wait and I wait and I wait, there's been a couple big moves early on, and then it starts to just steady out, and it doesn't really do much.
Yep, that's right. And that's the thing is the first 15 minutes of the day is not like any other part of the day for most stocks. So and that's why we've got, and I'm going to explain more of that in detail in the course as well, is this suits a certain personality, this business. This, I'm not saying that's a trade opportunity, suits, you see, it's gentler overall compared to this, wow, that beginning can be pretty wild.
Yeah.
And so there's a bit more certainty and cautiousness to 9:45 to 10, and of course you don't get in at 9:59. That's too late. Let's just finish the indicators, and then I'm going to get going, and we can do this again another day.
Sure.
So we tore off that. I'm going to go back to, here's a stock that moved a little bit. So here's the 9:45 bottom. The 9:45 top was way up there, so it did a lot. You can see how low that low is on that red one. So this area here, would I trade it? Well, I like that it broke the previous low. So I don't put as much weight on the 9:45 as an all-day thing, but it is nice to know because if it breaks that, then you can sometimes get a more comfort in taking the trade. But that's not the big item. Those other things have more weight. So I'm going to take that off, and that one's under breakouts.
Oh, okay.
Morning range, actually, yeah.
Oh, morning range. Are the breakouts there? They're the 5 day, the 7 day, the 60 day, whatever it is.
Yeah, that's what that is. So you'll get a 20-day and a previous high and low, and so that's really handy stuff. That
Right.
has a lot more weight than 945, although they're all useful. So the last thing I'm going to show you, we'll take this guy off, is the Y point. And the Y point's a little bit tricky to understand. It's not that complicated, but it's very much like support and resistance, except
it's get out now.
It's really fast, and it's really very good. So it's because it's drawn on the top of this candle, and it draws it somewhere while this candle's forming. It's saying
so that line is the Y point, or the blue line?
The blue dash, and then this orange line follows on after, so that you've got your support resistance marker.
It's so important, Chris, we gave it 2 colors.
There you go. Well, this one you can actually hover over and it'll tell you the price. Yeah, you can figure it out from here and there, but it actually says Y point. But I want it to get people's attention.
Okay.
And so this thing, it figured it out here, and look how right it was. And the point was, unless you're getting nicely lower than that, it's like probably time to leave. Especially if you came from up here to down there. That's a nice move.
Yeah. So most of the time when you see it, it means you're done.
You're done.
And it's usually telling you, pretty close to when you're done.
Yeah, and so there's a secondary line, and this brown line, and you can control, of course, all the colors and turn it on and off, but please leave them the same. That way, if you work with a coach, it's like, what brown line? This is using an alternate time frame. It's called Einstein fractals, and it's called that way for some scientific reason I won't get into, but it's good stuff. So if you're getting, this is actually a really good notice. It ended up being a resistance line later on. This was telling me that on some other time frame I'm getting close to an exit point. And so and this is the way to use it, if I was here and I got that, and then it breaks below a second Y point, you really ought to be gone. So we'll go find one. So like, let's say you liked this move here.
Yeah.
It broke that Y point, because that's what we talk about. And you go, I like it and whatever, and then you get another Y point. When I'm back here, because now that's the one further back, because there's one here, you really ought to be gone. It's just so rare that you make money. You're way more likely to lose money by hanging on, and like this could keep going. We don't know. We don't care. We're not supposed to hang around for all that. So if I go look at a stock that was a bit like some other stock here, Baidu.
Is there a time frame that it takes for those points to come in, or will you see those over 10 minutes?
You'll see that. That's the beauty of this thing. While this candle is forming, you're getting that Y point.
Okay.
Unlike support and resistance, it needs these many candles to say, oh yeah, that was your top. What? Yeah. But I'm over here.
Right.
You know, so the Y point is pretty phenomenal, and it took a really long time to make, so it's not a trivial thing, it's a big deal. So using the rules is like, well, this thing is just basically the same as that thing, but it thinks independently, and so then I got another one, and it's like, well, you know what, I broke it and it came back in, it's like, well, that's nothing. So here it looks like an opportunity, and if I wrote it, because you know, it's the wrong side of the open price, I don't like any of it, but let's just say I liked it. You know, everything else was in alignment. You know, I'm coming down here, I get a Y point. I'm getting too close to this thing. It's time to leave. I don't know anymore which way this thing's going. That's a problem. Right. Yeah. And that's why you get out, is I don't know. And I don't know is not acceptable in this game. So here there's another opportunity here where it broke that one. Sure, there was a bit of a run. I wouldn't ride that one anyways. But that's how you use the Y point, is it's like, as Scott says, is like when you're getting that thing on the chart, you probably should be going, and you know,
you've gotten into the trade and you're wondering like, how long should I go? Well, you know, we say get out after 10% or 12%.
Yeah.
But if you decide you want to hang on a little bit longer, when you see that you've hung on too long. get out. That's the point. So it's an exit signal. It's not an entry signal.
It's not an entry, no. I mean, you can use it that way as the point where it's like, I'm below this guy, I'm below that guy. I can probably get in on this thing if everything else is in alignment.
Yeah.
But, you know, it's like, I got this thing here, on this candle here.
Yeah,
That's a really nice time to leave. I mean, look, you would have got paid.
Yeah.
You know, but, you know, I can't tell people you must, and so I have to give people choice. So here's the
right. So you can use it as a get in, but you also want to use it as a get out.
Yeah. So like here, you know, I got dashed. You know, I've got all kinds of stuff. You see, but you know, my other rule, if I would have had 2 green candles, but there I've already lost more money by the second green candle. If I'm being told here that that's probably the bottom for a while, why not just get paid and go to the beach?
Yeah, because you'll save yourself a half an hour of worry.
Yeah, exactly. Yeah, exactly. Way to go, Scott.
Yeah.
So that's me looking at that going, oh yes, oh no, oh yes, oh no, and nothing's happening. And then, fortunately, it continued to go on, but there's no way of knowing.
Yeah, so that's pretty much it for what I put on my charts, and that's the default. I have the opening price here for people as well. I don't, you know, I used to care more about it. I still kind of do.
Right.
But
so just talk for a second about the top left right-hand corner. We've got a green bar there with 48 on it.
Yeah, so here, I'm just going to show you where that comes from because some people like it. If you go press F5 key, or if you go, where's my little toolbar guy? Minute log.
It basically tells you what the overall market or the basket that we use is doing. So the fact that it's green means that being in a red move is probably not a good idea.
Yeah.
Okay, so that's what that one is.
Yeah, so here I'm, that little drawing pen eats up my keystrokes. But that green bar here comes from that last bar, whatever that is, and puts it there, which is telling you market strength for a direction.
Oh, okay.
So here the market's closed, you get the red, it's gone to bed. Marker.
So 345% is the amount of the stock movement in the day?
Yeah, so compared to 100% average range day, Tesla had a phenomenal day.
Yeah.
So if the range was normally $10, so it would start at a price and move $10 up or down, it moved $35 today.
Right.
Okay.
Yeah. So this thing, changes with the time. So right here was a great red time in the market, and if you hover over it, it usually tells you what's going on.
Oh, yeah, the sun, by the way, gives you a clue.
Yeah.
Sunny, that means good. If it's cloudy, rainy, and you see a lightning bolt, it's not so good.
So
I'm not sure if they use that icon or not. I just
So it gets that information from the basket, and the basket is a very powerful way to aggregate and filter. That's actually its purpose.
Actually, one last question about the your minute log there.
Mm-hmm.
So I've got, I'm using the short list, and I don't have a lot in there, but I've been, how you can sort. So let's say if on the volume percent, let's say, how if you hit that, it will bring everything either to the top or to the bottom.
Yes, that's right. Yeah.
Is there one of those that you sort by? What's the best one to sort by? That, as a simple. I've been using volume percent. I don't know if it's good or
volume percent is really a very, very good one if you're using the short list to sort by.
Yeah.
It's really good. If you're using the main list, the one I sort by, don't tell anybody, I know this is public, is for the first half hour of the day, I sort by D%.
Oh, okay.
And this is the live tool. I'm going to close that because I'm getting confused clicking one to the other. But here we're going to go with, this is the list. When you go back in time, and so here we're in a more rational time, like 10 o'clock, this business here where some of these are bold and some of them are not, all these ones that are bold are moving ahead of the curve.
Oh, okay.
And when it's at 90% or 80-something%, I think I've missed it. So it's not bold. But these stocks here, they're all asleep relative to where they should be. So if I go to, I'm just going to bang through a few of them, and I'll turn on now the risk zone. Well, I'd say that one's asleep. Let's turn on volume. Yeah, it's pretty much asleep. And then, if I go to another one here, this is off the list. Here's Boeing. Yeah, it's really not doing much. Apple, not doing much. You can see it had a little something there. I know I blocked up most of it, but.
So go to Amazon.
So yeah, this is Amazon. It didn't do much today.
Right.
But if you go to Tesla, well, yeah, that's obvious. Everybody knows that today. But it was at the top of the list at D%. That thing is the shooting rocket. Now, if I go to the beginning of the day, the very first minute, yeah, here we go, first minute. Who's at the top of my list?
Tesla.
Tesla. Now,
so the reason why some are blacked out and some are grayed out, like if you go ahead a bit, the Tesla.
Yeah, well, you'll watch the D% here. So here it's moving up.
Okay, yeah.
This column here, the DC%, that's telling me the percent change in D%. So Tesla just picked up, it's at its high for the day, and it just gained 10%.
Right.
So this thing's a rocket moving up. So Google hasn't gained anything in this last minute, which means, it's maybe stalling. But see, these things here, this stock here, Q, should have moved maybe 23% to be of interest. It looks pretty dead. Now, later in the day, it picked up. That's fine. I don't care about later in the day. I'm trading now. So here, these guys are, you see now the minimum bar to be what I would call a mover is 30%.
Okay.
That's where it bolds it up for you automatically. And so it's like, well, this guy could do something. It's hitting a new low, and then it goes to sleep. But now the bar for my interest for what I call a mover is 33%. Oh, look at that. There, PCLN, this is ideal situation. Not perfect, but pretty good. It's just outside the risk zone. I probably have signal. I've got it turned off right now. I got a G here. The market is kind of greenish above the basket. This thing's looking pretty good. And I didn't have to think about a whole bunch of stuff. I just, I'm looking at it. I'm generally knowing that I like it. It's got a good range, right? $5 range. Well, that's pretty good. Its average range is 14. That thing's probably going to make some more money today.
Okay, right.
But when they hit, and I'm just going to move forward a bit. So, like 98%. That's now starting to get risky to trade because 100% is normal. If it's got a great day because the volume is phenomenal and some news came out and all that kind of crap, well, that's nice. But, fishing season on that one is closed. But some of these other guys, like BA, well, that's going red. Market's green. I think I'll skip that. Baidu, well, do I have a signal? And it's, I'm looking for it to break above this business here. But it's not complicated to figure that stuff out. I can just go, okay, I'm going to forward 1 minute. Still not doing anything. Now it might be doing something if the rest of it is good. But that's also what the newest thing is, and this is probably the last thing I'm going to add to the program because there's enough. See, there's lots of variety here. So there's this list here. Some people love this and trade by this because this tells you I'm outside of the risk zone. When you got green on green, that means it's outside the risk zone.
Right.
IWM is inside the risk zone because I've got pink and green. Here, red and red, it's out to the bottom side.
Right.
And it's been out for 8 candles. It's been out for 1 candle. So it's just barely, right? So the thing I was mentioning about what was the last thing I'm going to add is this EA column. You may have to do update. You know where that is, right? You just you go to the home button and you hit the update.
Oh, yeah, yeah.
Okay, so if you do that, you'll get the latest. There's going to be one more forced update as I find whatever little things there's no spelling mistakes left or whatever, but any other little thing that's not quite 100%, a behavioral problem is typically the stuff. But that is telling me that there's a bunch of energy happening on this stock right now. Is that a trade? No. but is that yet another way to say, you know, and actually Steve's using that. I've just found out from one of his students this morning. He used to use the rank column. Well, this EA right there is using rank plus a bunch more. It's very, very powerful. So rank was great, and it was amazing. This is even more useful for, like, you should look at that guy. But, you know, everybody trades a little bit differently. And
real
you know,
quick on that dynamic targets window that you had.
Yeah.
Is that a good one where, so you don't need multiple windows open? You can have, let's say, if I'm working on the short list with the one window, but because one thing I've noticed is that I'll be looking at, let's say, on the short list, there's a couple little stocks, but I'm just looking at different ones and nothing's really happening. And then all of a sudden I realize I missed one that was like one candle and it's breaking the risk zone. With that dynamic chart, you can kind of be looking down. And
and that's the beauty of that this is a different view, and the short list is meant for people as beginners, so to speak. Because it's like, well, I don't know a lot and I don't want to see too much, and it's like, what? You don't like all these columns? But there's more.
So, Alan, what's the difference between the dynamic targets and the main list?
This one is focused because it's got extra columns in here.
It has more columns than the main list?
It has more. There's some columns in the main that aren't here and some here that aren't there. But this was built specifically for people because it's got like this thing here, and it tells you right now that the Dow is moving down and the Q is moving up. But see, normal trading conditions instead of, so you got it's a little bit different, and that's just because of, you know, people and preferences and so on. But the big deal here is these two. And there's guys that trade with just this business here because they'll sort it on whatever they want, but they're looking at this and something that just cracks outside, and this is the easy one to sort by because that's telling me Apple just broke out. Well, how about that? And Amazon just broke out. Now this little star also tells you where it is, or this half ball tells you where it is relative to range. I know it's kind of complicated, but this is at the high for the day. At the low for the day, you get the red. So at the 90% or the 10% or less. So this is definitely at the low, and it tells you that here in this, you know, business here. But it's like
those are too many there. Bring it right in.
What's that?
I was going to say, I wouldn't be looking that far deep. There's too much number. You
don't need to, and so it's organized. That's what CLV stands for, is closed location value. So this is at between 0 and 100 for the day. It's at 3, so it's pretty close to the bottom. This one here is at 100. It is at the top price.
Okay.
But, you know, that's where all that stuff is. It's like, I don't need that. I don't want it. So this is organized, different order of columns as well. So this stuff, because it's about the dynamic targets, the risk zone business, these are the first columns. And so there's a bunch of people, they don't look at anything except this.
Right. No, that makes sense to me.
And so this star here is the same causality as this star here. It's the exact same thing, and that's why it's in the short list, because the blue star is a big deal for a lot of people. It's a marker that it already has moved a bunch today, but I would keep an eye on that for yet another move if you're going to be hanging around for another hour or so.
Right. Okay.
Anyways, I do have to pick up my honey. I said I would, and she's a long-term trade. Or is that an investment? It's an investment.
That's a long-term investment.
Okay, so has that been helpful, Chris?
Yeah, definitely. So just with regards to the new course, so is that something?
We'll be getting that to you as soon as we've got it done.
Oh, okay.
Okay. But it's basically going through all this in a lot more detail than we've done today.
Okay.
So I think
organized, yeah.
And I think the next step is for you to just, I'll put this up and make sure that you've got access to it so you can review it, because obviously there's lots here. And I think probably for the next few days or week is just like plow through and practice it all. Let us know if you've got any questions as you go, and then maybe in a week we can do another hangout and talk about some of this stuff in a little more detail.
Yeah, because the thing I'm going to actually want to get in the course is like, yeah, you know all the indicators, but how come that trade didn't work? That's the kind of questions that you'll want to have, is go grab some days where the trades didn't work, and why didn't it work? And I'll tell you, it's because, well, did it have this? Did it do that? Was it up here? And so basically everything you need to know about why the trade didn't work.
So that's part of the journaling that we'd like you to do too. Is like as you're doing a trade and you're thinking, oh, this is going to work, then make a note. Okay, the 27th of April, Apple, I got in at 3 o'clock. It didn't work, and then when we get together, we can bring that up and we can discuss those as like case studies.
And I'll use that in some of the training videos. I have a few what I call worst trades as a collection for me, and it's like, well, why didn't that trade work? Well, actually, it was on the chart. It was right there, but I didn't see it. It's like, really? Well, what was wrong with this trade?
Is it possible to, like, if I actually look at good trades, if I keep track of some of my good trades, is it possible to then go back and look at the live system to see if I would have been able to get in?
No, that's like a warehouse full of data that I don't keep. It's just huge.
Oh, okay.
But generally, the point is that most of the stocks that you're trading in the replay will work out for you in the live.
Okay. Okay.
And you will have, because everybody does this, is you'll have a few trading buddies that you like, meaning Tesla, but not Baidu, or LinkedIn and not Google, or you'll automatically do that.
Are you able to actually remove stocks from the short list or from the list so that, because for instance Google, like right now I'm not going to have a ton of money in my account, and I don't really be buying like tons of Google options.
Yeah, the best thing you can do, and it affects the basket though, is you can do things and mark them as favorites. And what happens, and it's Control F for favorite. So here I'm going to favorite Baidu. So it's got a little bit of tint. When I go to the short list, it's on the short list because I favorited it, even though that's where the tint is. So SPY is always on my favorites, and so here's Baidu. So if I go to some crappy part of some day, see there's Baidu. The end of the market, it's closed. There's nothing happening here, but it still has Baidu showing and with all the colors. So if there's stuff you like, rather than go through every start of a day and delete them, which you can, here's Google.
But you're better off not to delete them because, like Alan says, it affects the basket and everything else. And we want everything to be as consistent as possible. So when we're talking about something and you go, well, the basket did it, and you've removed 3/4 of the basket, where, right?
And some people, they set this minimum range to like $3 or something, or $2.
Yeah.
That's okay, and that will automatically rip out. And there is a hotkey for ripping out things below a certain dollar range. That's usually what works for people, but you're doing something the other way, and there's nothing in the system for that.
Okay.
Okay, cool. All right. So
thanks, guys.
Thanks, Alan. Thanks, Chris. Appreciate this. Lots of information, right?
Yeah.
Cool. All right. I'll send you the link as soon as I get it.
Okay, cool.
Okay. Talk to you later.
Thanks. Bye.
Okay, thanks. Okay, bye-bye.